If you are a tax-paying salaried professional, then you must be always thinking about reducing your income tax. Reducing income tax is very important to maximize your savings and a better future. In today's dynamic financial landscape, where optimizing resources is paramount, delving into a step-by-step guide to reduce income tax holds universal relevance. As we navigate the complexities of taxation, this guide offers actionable insights that empower individuals to strategically navigate their tax obligations, make informed financial decisions, and ultimately retain more of their hard-earned income. Step number 1. Understand your tax bracket. Understanding your tax bracket is essential for effective financial planning. A tax bracket refers to the range of income levels that determine the percentage of your earnings you're required to pay in taxes. Typically, tax systems are progressive, meaning as your income increases, the tax rate applied to that extra income also increases. Knowing your tax bracket empowers you to make informed decisions about income allocation, deductions, and investments, enabling you to potentially reduce your tax liability. By staying within a certain tax bracket, you can optimize your financial strategy, ensuring that you're neither overpaying nor underpaying taxes. This knowledge facilitates precise budgeting, investment choices, and long-term financial goals, ultimately contributing to your overall financial well-being. Step number 2. Take advantage of tax deductions. Taking advantage of tax deductions is a crucial aspect of optimizing your financial situation. Tax deductions are expenses, credits, or exemptions that can reduce your taxable income, consequently lowering the amount of income subject to taxation. By thoroughly understanding the available deductions within your tax jurisdiction and eligibility criteria, you can strategically manage your finances. Common deductions include those for mortgage interest, student loan interest, medical expenses, and charitable contributions. Leveraging these deductions can significantly decrease your overall tax liability, putting more money back into your pocket. However, it's important to keep accurate records, gather necessary documentation, and stay updated on changes in tax laws to ensure you're following regulations while maximizing your deductions. This prudent approach to tax planning can lead to substantial savings and provide you with greater financial flexibility and security. Step number 3. Explore tax credits. Exploring tax credits is a pivotal strategy in optimizing your tax situation and maximizing potential savings. Tax credits directly reduce the amount of taxes you owe, making them highly valuable. These credits are often tied to specific expenditures or life circumstances, such as education, child care, renewable energy adoption, or low-income assistance. By identifying and claiming the tax credits applicable to your situation, you can substantially lower your tax bill. Some well-known examples include the Child Tax Credit, Earned Income Tax Credit, and the Lifetime Learning Credit. Navigating the complex landscape of tax credits requires research, proper documentation, and staying informed about changes in tax laws to ensure you qualify and comply with all regulations. Careful consideration of available tax credits empowers you to minimize your tax burden effectively while potentially accessing financial resources that can support your broader financial goals. Step number 4. Contribute to retirement accounts. Contributing to retirement accounts is a strategic method for reducing your tax liability while simultaneously securing your financial future. Traditional contributions are made with pre-tax money, effectively lowering your taxable income in the year of contribution, and taxes are deferred until withdrawal during retirement. Contributions are made with after-tax money, but withdrawals in retirement are tax-free. By maximizing your contributions to these accounts, you not only create a disciplined savings plan for your later years but also harness the potential for substantial tax savings in the short term. Understanding the contribution limits, rules, and potential employer matches associated with these accounts is essential for making informed decisions that align with your financial goals and minimize your current tax burden. Step number 5. Leverage tax-advantaged investments. Leveraging tax-advantaged investments presents a strategic avenue for tax reduction while fostering long-term financial growth. Tax-advantaged investments, such as municipal bonds or investments within a health savings account, HSA, offer specific tax benefits that can lower your overall tax liability. Municipal bond interest is often tax-free at the federal level, HSAs provide a triple tax advantage: contributions, growth, and withdrawals for qualified medical expenses are tax-free, and 529 plans offer tax-free growth and withdrawals for educational expenses. By intelligently incorporating these investments into your portfolio, you not only capitalize on potential market gains but also optimize your tax efficiency, directing more of your earnings toward wealth accumulation and your financial aspirations, ultimately mitigating your taxable income. Step number 6. Consider tax-efficient asset allocation. Deliberating on tax-efficient asset allocation is a strategic approach to diminish taxes while optimizing your investment returns. Crafting a portfolio with tax considerations in mind involves placing tax-inefficient assets, such as those generating high levels of ordinary income, within tax-advantaged accounts, while favoring tax-efficient investments in taxable accounts. This strategy minimizes the impact of taxable events and capital gains, thereby reducing your annual tax liability. By tailoring your investment choices to align with your tax situation, you not only enhance after-tax returns but also create a disciplined strategy that harmonizes your financial objectives with prudent tax management, ultimately fostering sustained growth and increased wealth over time. Step number 7. Optimize business deductions. Optimizing business deductions presents a strategic pathway for tax reduction by maximizing legitimate expense write-offs, thereby lowering taxable income for individuals or businesses. By meticulously tracking and categorizing business-related expenses such as office supplies, travel, equipment, and operational costs, you can ensure that you claim all eligible deductions. Additionally, exploring deductions specific to your industry or business structure can further enhance tax efficiency. Employing this approach allows you to retain more of your earnings, reinvest in your business, and maintain compliance with tax regulations. Staying well informed about tax laws, maintaining comprehensive records, and seeking professional advice can empower you to strategically navigate the complexities of business deductions and minimize your tax burden effectively. Step number 8. Consult a tax professional. Engaging the expertise of a tax professional is a pivotal strategy for tax reduction, providing tailored guidance to navigate complex tax codes and regulations. A tax professional, such as a certified public accountant or tax advisor, possesses the knowledge to identify potential deductions, credits, and strategies that align with your specific financial situation, thereby optimizing tax efficiency. They can offer personalized advice on retirement contributions, investment decisions, business structures, and more, ensuring you leverage all available avenues for reducing your tax liability while maintaining compliance. Collaborating with a tax professional not only minimizes the risk of errors but also empowers you to make informed decisions that maximize your financial well-being, ultimately securing potential savings and fostering long-term financial success. In conclusion, achieving income tax reduction is a multifaceted endeavor that demands careful planning, informed decision-making, and proactive strategies. By understanding your tax bracket, exploring deductions and credits, contributing to retirement accounts, leveraging tax-advantaged investments, considering tax-efficient asset allocation, optimizing business deductions, and seeking expert advice, you can effectively navigate the complex tax landscape to minimize your tax burden. These proactive measures not only provide immediate financial relief but also pave the way for long-term wealth accumulation, financial security, and the attainment of your broader financial goals. Remember that while reducing taxes is a legitimate pursuit, it should always be pursued within the boundaries of the law, ensuring compliance and maintaining ethical financial practices.